energy got started?
Yeah, well, let me bring everyone up to date. We have a company here that there's a lot of enthusiasm right now, and what we're going to be doing, and basically it's going to be an exciting quarter. This will be our first full quarter as a public company, and we're doing two things. Basically, our mission is that of an energy company, an oil and gas company. That's where the origins are. And we're looking for properties and have identified some very nice properties that are traditional in nature. So there's no deep plays or offshore. They're all traditional vertical plays in existing fields where we can come in and take existing production and improve upon it with new technologies, and where there's what's called PUDs, proven undeveloped locations on the property where we can drill some new wells and bring out some new oil and gas. And there's a lot of value in these small traditional plays. In terms of the industry, they're less costly to develop than some of the deeper, harder plays. And where oil and gas prices are now, it's a great model. There's great margin in that. That's one approach we're using. The other approach is we're looking for companies that can help us enhance energy production and also stand on their own 2 feet. So there's a lot of industries we're looking at, and we hope to make an announcement this quarter, but companies that have their own revenue streams and at the same time can help with the energy side of the business. And what that does is two things. It makes us a more efficient player in the oil and gas space, number one. And number two, it gives us other revenue streams. I don't have to tell anybody who's covered this space how volatile the oil and gas space could be, and what the future looks like. There's a lot of variations in prices and supply and demand needs over time, and it's good to have other revenue streams that are independent of that to give the company some solid. It makes it better able for us to have some solid projections going forward, and not just be susceptible to just oil and gas prices going up and down like a lot of independents are. So it's going to make us a little more of a safer bet. I think it's going to improve our prospects, and I think when people look at our margins going forward, they'll see a very favorable comparison between us and our competitors.
Now, you're talking about buying smaller, already in working or already producing wells, right?
Yes.
Um,
Most of, you see, a lot of people don't understand. Everyone knows the big players. I don't know about how much the audience understands, but everyone likes to see what Exxon's doing and Shell's doing and all the big players. But a large percentage of oil and gas production is done by independent oil and gas producers. And that's the category that we would fall into. And we see opportunities in getting leases that get overlooked by the big players. They could have as small as 5 wells on them. They could have 30 wells on them. And usually there's other opportunities. They've been in production for some times. We are not a wildcatter. So we're looking to buy production where we can increase productivity on a given field. And, the Exxons of the world, they're not, they do things in the $1 billion space, and it'd be nice to get there someday. But we're looking for properties, 5 million, 10 million, 15, $20 million properties where we can take those properties and make them 20, 30, 40, $50 million properties, because we think that's a great space to be in. And the margins are such that it's an attractive time. We like the oil markets for the next, it's hard to predict way out, but I see the next 3 to 5 years being very strong for these markets.
yeah, of course. No matter what they say about renewable energy and moving to battery operated and solar operated things, they can't do away with the fossil fuel consumption in world markets. It's not going to happen. I mean, they can try their best, but they don't even have enough energy to support everything. If it was if everything was battery or solar operated, they don't have
Well,
it.
well,
The infrastructure in there.
yeah, you're right, but we're not going to be the kind of company that says it's either us or the other guys. We see renewable energies as a possible space to play in, actually. If the alternative fuels, if that provides, we want to view ourselves as an energy company, not just an oil and gas company. And oil and gas, I think you're absolutely correct. It's going to be around for a long time, very long time. What mix it's going to be of the total energy grid, who would know? But it's going to be attractive enough, and we still have to meet those energy needs in the oil and gas space for some time to come. But we are open to looking at certain renewable energy plays, looking to be a more diverse energy company. And if something's attractive to us in that space, we'll look at it seriously. We are an oil and gas company first, and we think the country and the world is going to need oil and gas for a long time, long after I'm gone. What that mix will be, though, is anybody's guess. So there are opportunities in renewable energies. We're not ignoring them, but we'll keep an open mind.
Everything in due time. Now, there's a
Yep.
few ways that you can increase production of wells. Do you already have some of those things set in place for when you make some acquisitions?
Yes. I can't give away too much right now, but there are ways to measure, in particular, measuring the proper way to pressurize a well. There's ways to go in and say, there's simple improvements that everyone can make, obviously, but there are ways to technical ways to analyze a well and how to pressurize them in different ways to bring the most oil and gas out of a formation. There's certain fields down in Texas and Oklahoma and New Mexico and places like that that are, were developed and are entirely old school, and a well can go from 30 barrels a day and go down to 5 wells a day, and for relatively little bit of money, you can work them over, apply some of the new technologies, and get a well going from 5 barrels a day to 15, 20 barrels a day. Sometimes you can double the output just by improving an old well. And it might not sound like much, but if you have, 2, 3, 400 of those, it adds up to some pretty good production. And then you have the new production, which wells like that can go anywhere from 30 to 60 barrels a day. But the attractive part of this, and this is why we like it, is these types of wells tend to have very low decline rates. There are wells that produce for 20, 30, 40 years, and some wells that produce for 50 or 60 years. And in the shale business that everyone gets excited about, or did anyway previously, where they dig deep, highly expensive wells, where they do a lot of fracking and everything, those wells produce a lot, but they have very high decline rates, and they cost a fortune to rework 2 or 3 years later, and they're very expensive. We like the low-cost, low-maintenance wells that the margins stay high, the costs are low, and they just keep pumping and pumping and pumping, and that's it. These wells go on forever. And if you're a small independent, having that kind of cash flow is very attractive, because you can turn that money into other leases and other production and other acquisitions without
So
having to go
from what
back
you've
in and
said so
spend
far,
millions. Yeah. I'm
So
sorry.
from what you've said so far, you've identified one of the things that you're strategically doing to position your company better tomorrow than it is today, and that's looking for an acquisition of smaller independent wells that are able to be reworked and have increased production. So that'll bring money right to the bottom line of RENI, correct?
That's exactly correct. But what we like about it is it's like an ATM machine. Once you develop one of these fields, these low cost fields, they'll produce forever, and that revenue can be used to grow the company. We want to be self funding in a lot of areas. A lot of small independents got ahead of themselves. They over leverage. They don't diversify. We're not going to make those mistakes. The last time we had a boom, a lot of independents were making all sorts of money. They borrowed everything they could to drill as many wells as they could. And then when the oil crashed, you had a lot of bankruptcies. There was a lot of consolidation. And the reason is you were dealing with oil people. They weren't finance people. And they just borrowed too much when oil prices were too high, thinking it would go on forever. And it never does. History repeats itself. So you have to be kind of smart. And one of the things that we bring to the table, me and my partner, John Bianco, is that we know the oil and gas business, but we also come from a finance background. We know about over leveraging, and we're not going to be one of those people who do that. So there's some safety in that. We want to self-fund some of these projects as we start producing cash, and leverage is okay as long as you don't do it the wrong way. We just don't want to be an over-leveraged company, because oil goes up, but guess what? The price of oil comes down, and we want to make sure we're profitable in both instances.
So for those listening, this is really important to take note of. I mean, when you're looking at investing in OTC or emerging growth companies, being able to find a company that's focused on self-funding or non-toxic deals in order to make acquisitions or expand the company is really integral. You don't want to have, I mean, because toxic notes come with dilution and a lower stock price. It's a downward spiral is what they call it. But so right now, take note that RENI not only has targeted certain acquisitions and they know exactly what they're going after, but they have a plan of action to increase what those acquisitions are producing, and they look into self-fund it. And are there other ways that you might be able to make these acquisitions? If so, could you explain that to some of the people listening?
Yeah, well, we're not set in our ways in terms of each acquisition, how we're going to do it. We're making one acquisition by doing a stock for stock deal. We're acquiring a company without any cash, actually, in exchange for funding their growth. Where they're going to become a wholly owned subsidiary, and you should listen for our announcement in the next week or two. I can't say more about that one now. With a lot of the oil and gas plays, we'll use some debt, we'll use some equity, we'll use some stock. We're not against having an offering maybe later in the year or next year. We haven't made any decisions, but we're open to various different kinds of financing, depending on the deal and what makes sense. Just want to make a quick addition to what I said is, John and I, we're in the corporate side, we're in the finance side, we understand how all of this works, but you can't build a company without experts. You can't build it by yourself. If you want to go from a smaller public company to a little bit of a larger company, you're going to need a good team. And with our first oil and gas acquisition, for example, we're acquiring a man who's going to help operate our. He's part of a team that he heads up a team that brings a lot of expertise to the table and will help us grow that side of the business. He's got over 30 years of experience. He's a petroleum geologist. He's worked for the majors. He's had his own company, and he's one of the most respected guys in Texas. And when we finish that, we'll tell everyone who it is. But we're going to have a great team with all the acquisitions we make. We're going to bring in some really good experts. We really want to grow a solid company, and I don't believe, I've run big organizations before. You got to have good people work in the different departments for you, and that's what we're looking for. Not just good assets, good companies, but we want to get good people.
Now that makes a lot of sense. We recently did a Q&A with BLFR, and they're in the oil and gas industry as well. And one of the things they said that stands out is resonating again with what you're saying, and that's when you purchase another company that's already in production and doing well, you don't want to remove the people that have been running it forever, because you want them to be able to operate that and oversee it, maybe aid in increasing production. That way you have a larger team, and it's not as much headache on yourself. I mean, you want to keep it going. And you already have people that are being able to see an increase in something they've invested their time and efforts in, which can be really encouraging. I mean, it's a nice setup.
Yeah, well, that company's smart, because you want to create a win-win situation. Very often they want to join us because we can bring them to the next level with our financial background. They're going to bring us to the next level with their industry expertise. So we want to create win-win situations, because that's how everyone does well in this business, or any business. I think it's just a good philosophy.
That brings us to our next question.
Yeah.
Now, when you're looking at investing in an OTC company, not only finding out their game plan and their strategic backbone and the executive people connected to it, you want to find out how is the company capitalized. Specifically, like how many shares outstanding, restricted, unrestricted, and how does that look for these investors?
All right. Well, I guess maybe I thought I said it before, but I guess I was cut off. So maybe I was speaking to air. So I'll repeat it. We have 20 million shares outstanding, 13 million are restricted, about seven is unrestricted. There's not sure how much is in the float, probably about 5 million in the float. Those numbers will increase as we make acquisitions. We have 100 million shares authorized. But it's a great structure because there just is not, as these companies go, there's just not a lot of shares out there, and that's nice because we're going to give value to the shares. You get these companies that have 500 million shares out there and they never get above a penny. We don't intend to be that kind of company. So the capital structure is pretty good. The market cap is real low. I'm not even concerned about it. That's going to change with our acquisitions. I'm not even going to be that concerned. I mean, that's for you guys a little bit to going to be watching the stock or going to look at the future. I think the future is great. I think the stock will go up. My job is just to run a good company and let the stock take care of itself. But we have a good capital structure, and I think that we're a good play.
I think another key point in making these acquisitions,
yeah.
It's not like the stock used in making the acquisition is going to hit the market immediately. I mean, usually, most of the time, it's either 6 months to a year hold on restricted stock, and the people don't want to sell because it's also their position in the company that they've invested their time and effort in trying to build. So they want to hold on to that stock so that they can remain part of where this is going in the future. So, I mean, that's really important for the investors on the call to see.
Yeah, well, a lot of the restricted stock is held by myself, my partner, and a handful of others, and we're not parting with it. I can tell you that. Not.
Well, I was referring to when you make an acquisition. If you're doing, for instance, a purchase of some oil wells with stock, then it's not going to be free trading stock, and the people are still going to win part of it. So it's probably not going to hit the market anyways.
I understand what you're saying. Yes, that's exactly true. When we're using stock with the acquisitions, it will be restricted, and people will have to hold on to them. Absolutely.
So you did mention that you're looking at being an energy company and not just an oil and gas company. So, I mean, if you can't tell us who you're acquiring or what acquisition targets you've already started engaging with, could you share with people what type of criteria they have to meet to be considered as an acquisition target?
Yeah, well, we want companies that meet our mission. Basically, we're focused on energy, but we are open to companies that not only support that mission, but can exist on their own and may be involved in other industries altogether. The biggest thing we're looking at doing is making sure that the companies that we acquire or the assets we acquire are cash flowing, that they have positive cash flow, or they will have positive cash flow soon. We are not going to be funding startups. We want companies that are already cash flow positive.
You mentioned that you are making other acquisitions.
Yeah.
Can you at least share what type of acquisitions they might be?
Without naming the company, well, we're going to get involved with something in the aerospace area. Believe it or not, it's got some uses, for example, with what we're doing in the energy space, but they already have a client list that has little to do with energy, but we're going to actually bring them into the energy market. I really here I'm going to throw out a teaser. We're probably going to announce this within 10 days. So everyone should follow. It's going to be exciting. I've been warned about how much I can talk about it before we file an 8K, of course. but it's going to be exciting. So I don't know what else I can say about it without getting into a little trouble. But
Don't. That's a hidden egg in the first OTC stock talk space. I mean, that's great.
yeah, so it all I can say is look forward to the announcement, but it is in that space, and they haven't been in energy before, but we see an application for their product in what we're doing, and they already are. They got a long list of clients, great clients, I might add, and we're going to be very excited about making that announcement, maybe by the end of next week, actually.
That's awesome. I noticed you guys just started communicating with your Twitter account. Website's been revamped. You know, you're coming out of the woodwork here, or out of the ashes. My question is, could you explain a little bit more about what you mentioned earlier? You said that you might be looking later in the year or next to do some possible raises. What does that look like, and what would that money that you're raising go towards to expand the company?
Well, we don't want to do any offerings until we get some traction and get a nice valuation going and be attractive for an offering. It's very hard when you're a small company to put out some offering and people don't know what you're doing. But we think we'll have a nice offering at some point with the money to be used for further acquisitions, maybe retired debt, whatever we're doing at the time. We haven't made any of those decisions yet, but I think, and this is what I would recommend to anybody who's doing an offering, don't just make an offering. We want to be able to show that we made some great acquisitions, that were profitable, that the company has real value. And then when you make an acquisition, when you make an offering at that point, it'll be an attractive offering because people will be able to look at tangible results. And we think we'll be able to be in a position to make that decision maybe by the end of the year, certainly by next year. And we think having that kind of, if we make an offering like that and it's successful, we'll be able to make more acquisitions and continue to grow the company.
So just to give a quick recap, last week we were with Kiko Stock, talked about the 5 things you do before investing in an OTC market company. So they've shared with us how they're positioning the company to look better tomorrow than they are today. That's step 1. Step 2, we've looked at the share structure. There's roughly 5 million shares in the float. 7 million are outstanding. There's 13 in restricted. And they have a total authorized of 21 million? Or is that the outstanding?
20 million is outstanding. Authorized is 100 million. So
there we go. So they have some room to be able to make a few acquisitions and get going. So they have a strategic game plan. They're looking at acquiring, producing smaller oil wells that they can help increase the production of, the cash flowing right into being able to fund the operations of the company, expansion of the company, and bring some money to the bottom line. And they're looking at vertically expanding the company in other fields that support the energy field. And they won't mention what that is. That was a secret egg. So we've got a pretty good layout so far of expectations here, and I'm glad that you guys have taken the time to come on here and share it.
If I can add one thing is we're actually near the end. We have one acquisition that's already set to go in a week, as I said. But some of our other acquisitions that we've been doing diligence on, we're near the end of that. We're very pleased with it, and so expect other acquisitions in the coming months. We've really been working hard at identifying targets, and those targets, the diligence on those targets has been going very well.
Well, I promise you this. I'm going to have you back on without the technical difficulties again here soon. I'll probably wait till after the press release comes out and y'all close the first acquisition, and we'll have you back on so you can go over this with everybody, because I know it's going to be an exciting moment for Ari and I. One other question. How long was the company dormant before it's come back to life?
That's hard to say because it was still operational even when it was not that active and wasn't making acquisitions. So I would say about 2 years. I'd say that's a safe bet. But when it was completely dormant, it was about 2 years or so. We brought it back
That's
to
an
life.
exciting thing because, okay, so nobody's known about it. There's no front loading of the stock. There's no dilution because you guys have zero toxic notes, and the capitalization of the stock structure is really nice, and you got a game plan and you're moving forward. So I'm excited to
All
see what
true.
happens. I think that it's going to be a fun time for Ari and I shareholders. And again, I will have you back on the space, and I apologize about the technical difficulties we had earlier.
No problem at all. Joshua, thank you for having me. I appreciate all the people who listened in. We're very excited. Just want people to follow us and watch what we do. And hopefully we get some long players and who want to stay with us. So
Do me a favor on the post, the new one that shared the new link to the space. If you would make a comment with an email address that investors can get in touch with you through to ask questions or to connect with you if they're looking at an investment in RE&I.
sure. I'll put
Thank you
out
very
a
much.
tweet. I'll put it out there for everyone to look if they want to follow our space. I'll put that information out there shortly. Yep.
Awesome. All right, man. I will have you back on again. Until then, Mark, it's really been a pleasure, and I look forward to finding out how RE&I does over the next few weeks.
Thank you. And everyone, don't forget to follow us because we have the big announcement end of next week. You'll like it. So
Well, you heard it
thank
here
you.
first. OTC Stock Talk with Mark, the president of RE&I. It's going to be a company you want to add to your watch list. You definitely want to follow what's happening because from what they've said, they have a very tight timeline of coming news, acquisitions, and a lot of exciting moments. He's
Thank
going
you.
to also, oh, you're welcome. He's also going to post an email address in underneath the space so that if you, as an investor, if you have questions for the company, if you're considering maybe private placement, if you're considering trying to find out more information, by all means, get in touch with the. I think that they'll be responsive.